Decentralized finance, or DeFi, is revolutionizing the way people interact with money. It's a financial system built on blockchain technology that eliminates intermediaries like banks and brokers, giving users direct control over their assets. By leveraging smart contracts, DeFi enables financial activities such as lending, borrowing, trading, and earning interest without relying on traditional financial institutions. As the world moves toward a more digital economy, DeFi is shaping up to be a major force in the future of finance, the evolution of finance. To understand DeFi's significance, it's essential to look at how finance has evolved over time. Traditional financial systems rely on centralized institutions to facilitate transactions, hold assets, and provide financial services. Banks, stock exchanges, and payment processors act as intermediaries, enforcing rules and charging fees for their services. While this system has been effective, it also comes with inefficiencies, restrictions, and risks related to censorship, fraud, and high costs. The emergence of blockchain technology, particularly with Bitcoin in 2009, introduced a new way to transfer value without intermediaries. Ethereum took this concept further by enabling smart contracts, self-executing agreements that automate financial transactions. This innovation laid the groundwork for DeFi, creating an open and permissionless financial ecosystem accessible to anyone with an internet connection. Over time, DeFi has evolved beyond simple transactions, offering a vast array of financial services such as lending, borrowing, yield farming, and asset management. As adoption grows, DeFi continues to push the boundaries of what's possible in finance, challenging traditional systems and paving the way for a more inclusive and efficient economic landscape. Key components of DeFi. DeFi is composed of several core components that make it functional, efficient, and secure. Smart contracts are self-executing agreements written in code that run on blockchain networks like Ethereum. These contracts enable DeFi applications to function automatically, removing the need for traditional financial intermediaries. This automation ensures that transactions occur in a trustless environment, where predefined conditions are met without external control. Decentralized exchanges, DEXs, are another critical component of DeFi. They allow users to trade cryptocurrencies directly from their wallets without needing to go through centralized platforms like Coinbase or Binance. Popular DEX include Uniswap, SushiSwap, and Curve Finance. Unlike traditional exchanges, DEX operate using liquidity pools, where users supply assets in exchange for a share of transaction fees. DeFi also offers decentralized lending and borrowing platforms. Users can lend their assets to earn passive income or borrow against their holdings without credit checks. Platforms like Aave, Compound, and MakerDAO enable such transactions through smart contracts, ensuring fairness and transparency. These platforms often require borrowers to over-collateralize loans to protect against defaults, reducing systemic risk. Stablecoins play a crucial role in DeFi by mitigating the volatility of cryptocurrencies. These digital assets are pegged to real-world currencies like the US dollar, providing a stable medium of exchange. Popular stablecoins include USDT, Tether, USDC, and DAI. Stablecoins allow users to participate in DeFi without being overly exposed to market fluctuations, making DeFi a more reliable financial system. Another important aspect of DeFi is yield farming and liquidity mining. These mechanisms incentivize users to provide liquidity to DeFi protocols in exchange for rewards, such as interest payments or governance tokens. Governance tokens are issued by many DeFi projects, granting holders the right to vote on protocol changes and participate in decision-making. This decentralized governance structure ensures that no single entity has complete control over the network, maintaining its decentralized nature. Oracles are also essential in DeFi, acting as bridges between blockchain smart contracts and real-world data. They enable smart contracts to access off-chain information such as asset prices, weather conditions, or sports results. Oracles ensure that DeFi applications can function accurately based on real-time data, reducing the risk of manipulation. Lastly, decentralized insurance protocols have emerged as a means of protecting users from financial losses due to smart contract failures or hacks. Platforms like Nexus Mutual and Cover Protocol offer insurance policies that compensate users in case of vulnerabilities or exploits in DeFi applications. This addition enhances security and increases confidence in DeFi as a viable alternative to traditional finance. By combining these components, DeFi creates an open and permissionless financial ecosystem that empowers users worldwide. As the space continues to evolve, innovations in DeFi will further enhance efficiency, security, and accessibility, ultimately reshaping the global financial landscape. Advantages of DeFi. DeFi offers several advantages over traditional financial systems, making it an attractive alternative for individuals and businesses worldwide. Accessibility is one of the key benefits, as anyone with an internet connection can participate in DeFi, regardless of location or financial status. Transparency is another major advantage, as blockchain technology ensures that all transactions are publicly recorded, reducing fraud and corruption. DeFi transactions also tend to have lower costs compared to traditional banking services, as they eliminate intermediaries and their associated fees. Furthermore, DeFi operates on decentralized networks, making it resistant to censorship and difficult for governments or corporations to shut down or control. Perhaps most importantly, users retain full custody of their funds, allowing them to manage their assets without relying on third parties. Additionally, DeFi enables financial inclusion by offering services to people who are unbanked or underbanked, providing them access to lending, borrowing, and investment opportunities that were previously unavailable. Traditional financial institutions require credit checks, documentation, and geographic restrictions that DeFi bypasses, allowing more individuals to engage in global finance seamlessly. Another key advantage is the speed of transactions. While traditional banking systems can take days to process cross-border payments, DeFi transactions settle within minutes, regardless of geographical location. Security is another major advantage. While traditional banking systems are vulnerable to hacks targeting centralized databases, DeFi protocols rely on blockchain's decentralized nature, reducing single points of failure. Advanced cryptographic techniques further secure transactions, making it difficult for malicious actors to alter records. Additionally, DeFi's programmable smart contracts reduce human error, ensuring that transactions are executed precisely as agreed upon. Overall, DeFi presents a transformative shift in finance, offering users unprecedented control, accessibility, and efficiency, while challenging traditional financial institutions to innovate and adapt. Challenges and risks of DeFi. While DeFi has numerous benefits, it also comes with risks and challenges that must be considered. Smart contract vulnerabilities pose a significant risk, as bugs or exploits in the code can lead to substantial financial losses. Market volatility is another concern, as cryptocurrencies are highly volatile, which can impact the stability of DeFi investments. Additionally, regulatory uncertainty remains an issue, as governments worldwide are still formulating regulations for DeFi, creating potential legal and compliance risks for users and developers. Scams and fraud are also prevalent in the DeFi space, as bad actors can create fraudulent projects to exploit unsuspecting users. Liquidity issues can also arise, where users may face difficulties withdrawing their funds during periods of market stress. Furthermore, the decentralized nature of DeFi means that there is no customer support or central authority to resolve disputes, which can be a challenge for those unfamiliar with blockchain technology. Security threats such as phishing attacks and malicious contracts also pose risks, requiring users to stay vigilant and adopt best practices for protecting their assets. Additionally, scalability remains a concern, as high transaction fees and network congestion can limit DeFi's accessibility and efficiency. Lastly, DeFi can be complex for newcomers, requiring a learning curve to understand how to navigate the ecosystem safely and effectively, making education and awareness critical for adoption. As the DeFi landscape evolves, addressing these challenges will be crucial for long-term sustainability and growth. The future of DeFi. As blockchain technology continues to evolve, DeFi is expected to grow and integrate with mainstream finance. Innovations such as Layer 2 scaling solutions, cross-chain interoperability, and improved user interfaces will make DeFi more accessible and efficient. Institutional investors are also beginning to explore DeFi, signaling its potential to transform traditional financial systems. Moreover, central bank digital currencies, CBDCs, and regulatory frameworks may shape the future of DeFi, either by promoting its adoption or imposing restrictions. Regardless of the regulatory landscape, the demand for decentralized financial services is likely to increase, driving continuous innovation in the space. Additionally, as security protocols advance, DeFi platforms will become more robust, minimizing the risks associated with smart contract vulnerabilities and hacks. More intuitive applications and educational resources will emerge, making it easier for the average person to participate in DeFi. Governments and financial institutions may also start integrating blockchain-based solutions, leading to a hybrid financial model that blends the benefits of both centralized and decentralized finance. As a result, decentralized finance has the potential to not only coexist with traditional finance, but also redefine it, paving the way for a more transparent and efficient financial ecosystem that could ultimately reshape global economies. DeFi is reshaping the financial landscape by offering a decentralized, open, and transparent alternative to traditional banking. While challenges remain, its potential to democratize finance, reduce costs, and empower individuals is undeniable. As adoption grows, DeFi is poised to play a crucial role in the future of finance, paving the way for a more inclusive and efficient global economy.